Now, we've had a swath of banking earnings out this month. So how is the sector looking? We're joined by Olawale Oyebanjo. He's an equities dealer at Vetiva Capital. Thank you so much, Wale, for taking the time out to join us. Now, we're looking at Q1 numbers that have been released so far by banks. But let's start with the financial report of a certain bank that you saw and found compelling.
Well, among the banks, those ones that were very compelling includes the Tier 1 banks, most especially Zenith Bank, Guarantee Trust Bank, as well as Access and First Bank, including UBA as well. I think generally the performance has been quite good, in line with a lot of analyst expectation, and for some of them they even surpassed analyst expectation. That's in the space for the Tier 1 banks. For the Tier 2 banks, it has not been so fantastic, and it is expected. When you see good performance generally in a bit harsh space, okay, the Tier 1 banks are likely to weather through and do better. Okay, now
there appears to be a significant, or we've seen a significant growth in non-interest income across the board. What do you make of that? Is this a trend you think banks can sustain in 2015?
I don't think so. I think the banks, they've just been able to display their ingenuity in terms of, for Q1, it's the period when you had the political events, a lot of political activity playing out, and at that particular time you had the FX wasn't that stable. We saw the foreign reserve actually going down during that period, but they were able to, if their main business, which is interest generation, if that could not be what will sustain the business, then they have to look for alternative means, and they went through the route of the non-interest income, and they were able to do well in that space. Now,
what are your expectations in terms of how these banks will manage KPIs like operating expenses, provisions for loan losses? I'm just looking at Fidelity Q1, the latest out among banks. Operating expenses were up 13% year on year. Provision for loan losses up 154%. That's quite significant.
Generally, in this space, we've seen operating expense being the major thing that a lot of banks have not been able to curtail. It's more for some banks like First Bank. First Bank has been the major problem for First Bank for several years now. The likes of Zenith Banks and GT have been able to curtail it better. But for the likes of First Bank, I think it's still one of the things they will need to sit down and get themselves well with. For the likes of Zenith Bank, GT, I think they're managing their operating expense quite well. For the Tier 2 space, it's still going to be a big challenge for them managing their operating expense. The likes of Fidelity Banks and UBN, that's Union Bank. I was going to ask you about your thoughts about the
Union Bank story. I mean, coming from 2009 financial crisis and looking at where they are today.
Yeah, I think they've done a pretty good job. Looking at their year-end result, it was beyond a lot of analyst expectation. The Q1 result is out, which is not as good as expected, but last year, I think they had some extraordinary income come into play. They had sales of some subsidiaries, so we've not seen that income come into play this time around. I think going forward, I think they are likely to do better in the coming quarters. All right,
Wale, we're going to have to leave it there. Thank you so much for sharing your thoughts and perspective on banks' Q1 earnings. That was Olawale Oyebanjo, equities dealer at Vetiva Capital.